Sanjeev, so I think one of the bigger question all these internet companies or the startups face is a trade-off between scale and profitability. Because you want profitability, but you want profitability with scale. And somehow, for whatever reason, the world of finance has inverted the whole barter system that existed between investors, companies, and customers. The traditional model of business is you provide services to the customers, make money, and give it back to shareholders. And somehow we've inverted this whole model over the last 15 years where you take money from shareholders and give discount to customers to acquire customers. Yeah. And which is where these companies are caught in terms of trying to trade off between building scale much faster and or try to strike profitability. So, meaning, what is your advice, or when you look at investee companies, and in some sense, in some of your businesses where you've been into investment for a long period of time, what's the right path, and how do you strike a balance between the two?
Very old school, Pankaj. We like to get customers, we like to serve customers, we like to sell to customers at a price that's higher than our cost, and in the process make a profit and then create shareholder value. But post 2008-9, post the global financial crisis, there was so much liquidity because the Fed would print its way out of trouble all the time, and this money would find its way all over the world. India, China, private markets, public markets, there was asset price inflation everywhere and too much liquidity. Now, when that happens, पैसों की कीमत कम हो जाती है. जब पैसों की कीमत कम होती है ना, then people get more money than they actually need, and they utilize it to get scale, never mind profit, because the competition is doing the same thing. Because if I don't do it and my competition does it, I'm going to lose out. Because my competition is also being funded by the same capital, and that becomes a problem. And therefore, incentives are different, and they were different until about a year and a half ago. And when the liquidity got tightened, when the Fed began to contract its balance sheet, interest rates went up, suddenly everything changed. Hey, guys, capital efficiency is back. So companies have to pivot. Entrepreneurs have to, now go back to what was prudent unit economics. And many of them, I must say, are successfully making the transition. Some are not. So this is the year of reckoning, where when the dust settles, the grain would have been separated from the chaff.
Sure. I'm of the opinion that free capital is now gone forever. Next 10 years, we're not going to see that free capital come back in the world, and the cost of capital is real. So I think a lot of these businesses will have to make the choice and probably choose profitability over break even.
No, no. If I don't think there's a choice. You have to choose profitability over growth. Ideally after that, profitability with growth.